Can AMD continue to skyrocket? That's what everyone wants to know. AMD stock is at $177 a share, up almost 47% this year, and I'm still bullish. Here's why. Look, I've been trading since 1999, and no, I'm not a financial advisor, which means I'm not here to sell you an expensive retirement plan. I'm here to break down the numbers that actually matter. AMD just released their second quarter earnings that crushed expectations. Revenue up nearly 32%, net income up 300%, and they did it without selling anything in China. Think about that. But here's the part that nobody's really talking about. AMD is quietly positioning itself to re-enter China, and if they pull it off, it could unleash billions of dollars in new sales almost overnight. Meanwhile, they're taking direct shots at Nvidia with their MI400 series, aiming to grab a share in one of the most profitable markets on the planet, AI chips. While most investors are looking at the chart, I'm watching the one signal in AMD's strategy that could completely flip its valuation in the next few years. Stick around to the end, because if you're a retail investor like me, this is one of those breakdowns you won't want to miss. Let's get into it. AMD, or Advanced Micro Devices, is one of the biggest names in high-performance computer chips. They make the brains behind everything from gaming PCs to massive data centers. And if your computer doesn't run on Apple, Silicon, or Intel, there's a good chance it's powered by AMD. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. But here's the thing, AMD isn't just competing anymore. It's aiming to dominate in the fastest growing corners of tech. They've built a reputation on delivering great performance at a price that makes sense. And now they're going after the fastest growing areas in tech. And that includes AI chips like the MI300X and the MI308, server processors called EPYC, and their popular Ryzen line for everyday PCs. So if you think that AMD is just a cheaper Intel, you're missing out on the bigger picture. Now, let's talk about the stock. At the time of recording, AMD is trading around $177, up 47% year to date. And that's a serious rally, and it's worth asking if the momentum has legs. If you want to follow along, go ahead and scan this QR code. And in terms of momentum, AMD has delivered gains for more than 2 decades, with few speed bumps along the way. And I've learned that when a stock can survive multiple cycles, the market is telling you something about its staying power. Now, AMD stock is rated a moderate buy from a consensus of Wall Street analysts, and it's easy to see why. With cutting-edge chip technology and a quiet but strategic re-entry into China, I think the future for them looks promising. Analysts suggest as much as 30% upside potential if the stock hits its high target price of $230. Now, the numbers are good, but the story behind the numbers is what really moves markets. AMD is in the news again because it released its second quarter 2025 financials, and the results blew beyond expectations. EPS came in at 54 cents, exceeding Wall Street analysts' consensus estimate of 48 cents. And beating Wall Street is nice, but it's what AMD didn't say that got my attention. During the earnings call, CEO Lisa Su made no mention of the China market, even though they've already been given the green light to sell their products there once again. She also avoided giving any projections for that market. And personally, I think that was very smart. I think it's a story of under-promising and over-delivering in a later quarter. And when a CEO holds back like this, it's often because the upside is bigger than they want to let on. Now, let's take a look at what AMD reported in its second quarter numbers. Sales are up 31.7% from the same quarter last year to approximately $7.7 billion, and its net income rose 299.1% to $872 million. And these figures were achieved without making any sales in the Chinese market due to the export restrictions. Personally, I think it's impressive that AMD didn't just survive losing a major market, it actually thrived. I mean, it's not just growth, that's resilience. Now, taking a closer look at its segments, its data center segment is up 14.3%. The client and gaming segment rose 69.2%, while its embedded segment, that one declined 4.3%. And the results are no surprise, as it supports AMD's adoption in terms of CPU and GPU usage. But honestly, though, those moves, they're not surprising. AI and gaming hardware adoption is driving big gains in the first two, while embedded has been softer as demand for certain industrial and automotive applications has sort of cooled off a little bit post-pandemic. Despite this slight decline, I don't think this will affect anything materially, especially since AMD's financials overall have been great. I mean, AMD's weak segment is actually a rounding error when you look at it compared to its growth engines. But this is where the story gets interesting, and where AMD's future could actually be rewritten. Now, there's no certainty about its future, but given its historical performance, plus the continuous innovation and improvement of its technology, I think AMD stock still has legs. Here's why. The first reason would still be AMD's return to the Chinese market. Now, if you watched my previous video on AMD, you may have recalled that I said this actually before. The restrictions led to AMD missing out on revenue of about $800 million, yet the company's CEO didn't forecast its potential revenue in China despite the export license being approved. But no expectations doesn't mean no upside. Once AMD starts exporting its MI308 chips, hundreds of millions or billions of dollars in sales could come back fast. And that's the kind of hidden upside that Wall Street often misses. The second reason would be AMD's MI400 series. AMD's MI400 is shaping up as the long-awaited response to Nvidia's most powerful AI GPUs. Unveiled at AMD's Advancing AI event, the MI400 is on track for a 2026 release. And if the company hits this timeline, it could be a big catalyst that could shift the market share in high-value AI workloads. If AMD even chips away at Nvidia's dominance, that's billions of market cap on the line. And the last reason would be a price hike. Rumors are that AMD's MI350 retail price will be increased 70% from $15,000 to $25,000. And while this might seem steep, remember that this chip isn't for the casual gamers. It's made for the bigger hyperscalers, a market that's booming, has tons of money, and shows no signs of slowing down. If the reports are true, this move could boost AMD's profit per unit, and I don't think it'll hurt demand one bit. Think of it as pricing power in a red-hot market, and that's really rare and super valuable. And this is a question that comes up a lot in my Discord channel. Can AMD really catch Nvidia in AI? Well, think about it like coffee. For years, everyone just grabbed Starbucks, right? It was everywhere, it was easy, it was the default. When smaller coffee shops started serving up better beans, fresher roasts, and charging less, what happened? Well, at first, people stuck with Starbucks out of habit. But once they tried the alternative, they realized they were overpaying for average. And Nvidia is like Starbucks, the established brand everyone defaults to. I see AMD as that specialty shop, brewing something just as strong for less and winning over customers one cup at a time. That's why I say never underestimate the challenger brand. Now, before you get too excited, here's where AMD's story could hit a little turbulence. It might look like everything's lined up perfectly for AMD, but it's not the entire story. While AMD's return in China is making headlines, AMD, together with Nvidia, have reportedly struck a deal with the US government to pay 15% of their AI chip revenue in exchange for export licenses. Let's call it a tax. Now, it may seem like a good deal because it unlocks the doors to the China market, but it could also be a double-edged sword. In the long run, this tax could mean margin pressure. And if competition beats AMD or demand underwhelms, it could be less profitable or even lead to losses. So you could say, yes, China opens the door to revenue, but Uncle Sam holds the keys to profitability. Then there's the Chinese government. They're urging Chinese companies to not buy Nvidia's H20 or those chips from AMD, at least until a national security review has been completed. Bottom line, at the moment, the Chinese government wants Chinese companies to buy Chinese AI chips. The next risk would be that AMD is juggling a lot of pretty big projects at the same time. The company is working on its MI400 series, Helios AI full rack systems, a potential MI500 chip, and other new chip products which are set to be released in 2026 or 2027. But with so many ambitious launches stacked up, any delay could let competitors tighten their grip on the AI market and quickly kill AMD's current momentum. And I've learned this the hard way. Execution risk kills great ideas faster than competition ever could. So with my case scenarios out of the way, let's now have a look at the stock's valuation. Comparing AMD to its industry peers, AMD's trading around 67 times trailing earnings and 57 times forward earnings. That's not cheap. And it's actually even higher than Nvidia on both counts. But the story doesn't end there. AMD's price-to-sales ratio is 11.39, while Nvidia's is 34. That means investors are paying much less for every dollar of AMD's revenue than they are for Nvidia's. And the reason could be that AMD's profit margin is only 6% compared with Nvidia's 56%. And, of course, the return on equity is also weaker. I think the discount makes sense right now, but if AMD can improve its profitability even just a smidge, I could see the stock moving from being fairly priced to looking undervalued. But the opposite could also happen. Here's the bottom line. AMD doesn't need Nvidia-level margins to win. Even small improvements could re-rate the stock in a big way. So who's this stock really for? If you've watched my videos before, you know that I don't gamble on stocks. I don't play the stock market. I invest in a stock only if I personally believe in it. With that, I see AMD as a long-term investment, a great addition for those who can endure price swings through a 5 or a 10-year holding period. Its technology is promising, and I can honestly see it competing against Nvidia. But the path to profitability could be shaky, and that could scare many investors, which I understand because I've been there before. But if you're like me, who can accept calculated risks, then I think AMD could be a good holding. But what about you? Are you jumping into AMD for the AI wave or holding out for a pullback? Let me know in the comments below. And while you're there, if you found the video helpful, don't forget to like and subscribe so others will find it as well. Thank you so much for watching, and I'll see you next time.